Hello and welcome to Business 360. I'm Archana Solanki. Here are the headlines we're tracking this evening. Sensex and Nifty gain 1% this week despite declining on Friday. Mid-caps and banks outperformed the blue chips. This week, rupee remains closer to its record low against the dollar. Former policymakers list out their expectations from the union budget. Expect overall capex hike in 5 to 2% range and a 15 to 20% growth in defense budget. They also expect the share of government borrowings in the overall budget to come down. Former tax architects call for abolishing securities transaction tax ahead of the union budget, say it has outlived its purpose. Also call for rationalizing the customs duty framework and slashing the number of slabs from 8 to 4. Industry body FICCI expects the manufacturing thrust to continue this budget, says that while some sectors could be prioritized via PLI schemes, it cannot be a panacea. Adds that the PM internship scheme isn't working because there is not enough incentive for the industry. India's new inflation formula will lower the weightage given to food prices. Commodities will be regrouped based on consumption. Transport, housing, electricity and fuel will see higher weightage in the formula. Apple reports record quarterly revenue of $144 billion thanks to blowout iPhone 17 sales. Company says India revenue hits a record high with double-digit growth. US President Trump expected to appoint Kevin Warsh as the next chairman of the Federal Reserve later today. 55-year-old Warsh is a former Fed governor turned critic and is likely to succeed Jerome Powell. Trump has consistently bashed the Fed for not cutting rates faster. US President Trump files a lawsuit against the US Treasury Department and tax authorities over the disclosure of his tax returns in 2019 and 2020. Seeks $10 billion in damages for causing significant harm to his reputation. All right, let's start with the market action. Sensex and Nifty declined nearly 0.5% on Friday as the Wall Street awaits the union budget on Sunday. Sensex lost nearly 300 points. Nifty lost nearly 100 points. Mid-cap index also declined, but the losses were limited. Bank stocks saw some sharp cuts, with the Nifty Bank Index losing nearly 350 points. Despite the decline on Friday, Sensex and Nifty managed to end the week with gains of 1%. Mid-cap index gained over 2% this week and Nifty Bank also gained nearly 1%. In the money market, the rupee remains close to its record low against the dollar. The Indian currency ended the day just below the 91 mark against the greenback. The US dollar index has been hovering near a 4-year low, but that is not providing any help for the rupee as it continues to remain under pressure. Gold prices have slipped after hitting record highs in the last session as investors booked profits. A stronger dollar also weighed on prices. Despite this, the yellow metal remains on track for its strongest monthly performance in over 25 years, driven by safe haven demand. Silver prices also fell sharply after scaling new peaks yesterday. Similarly, oil prices fell after hitting multi-month highs. This as the USA's decision to ease some sanctions on the oil industry in Venezuela ignited concerns of oversupply. Waning fears of a US strike on Iran also weighed on prices. However, oil prices, Brent and WTI remain on track for significant monthly gains. Right, former policymakers expect defense capex to receive top priority when Finance Minister Nirmala Sitharaman presents the union budget on Sunday. My colleague Shireen Bhan exclusively spoke with the former budget architects at the Budget Vision. They told her that while defense capex may see a 15 to 20% hike, overall growth could remain in single digits.
If you raise the total budget expenditure by 5 to 6%, and you have certain expenditures to take care in any case, like the interest, which grows at much more higher rate, and the Finance Commission recommendations would also be coming, which will require greater allocations for the state transfers, etc. In that situation, can you increase the capital expenditure as well as the other economic growth expenditure by a very large margin? I suspect that space is not there. So I would see that this, in my judgment, it will either be more or less at this level, or maybe a couple of percentage higher than that.
Okay, so single-digit increase is what you're anticipating as far
Lower
as...
single digit.
Lower single-digit increase is what you're anticipating as...
The current year budget allocation is definitely going to be much higher than the previous years. And the growth in capex is definitely, in my understanding, going to be around 15 to 20%. And there is scope and potential to be a higher figure also.
Higher
However,
than 20%?
Yeah, because if the industry is ready, they are able to deliver what has already been ordered. The final expenditure outgo is going to be quite heavy, considering the type of platforms which are on order.
Industry body FICCI anticipates the push for manufacturing to continue along with a higher allocation for research and development this year. Speaking with Shireen Bhan at the same event, industry leaders said that while some sectors could be prioritized via PLI schemes, it cannot be a panacea.
There were two segments that FICCI particularly recommended. One is defense outlay, which was just touched upon in the previous conversation. The nature of warfare is changing. The number of conflicts have increased, and therefore we've recommended increasing our outlay towards defense research, increased capital investment, and overall investment in defense. So we've recommended a mega industrial park for EMS where you have the entire value chain present, and that value can therefore then be extracted much better and with higher value addition by Indian industry.
Sorely disappointed by the removal of the capital gains tax benefit given and taken away actually for bonds and mutual funds as happened. And I understand why it was there. As an erstwhile banker, we were trying to support deposits for banks and bring parity there. But, you know, it's not as if it's really aided deposits. And maybe it's time to relook at why we did that and bring bonds, capital markets treatment more at parity with equity, because we are seeing the decline in mutual funds in debt. It's an important asset class for the retail community and indeed for all investors.
The former tax architects have called for abolishing securities transaction tax ahead of the union budget, saying that it has outlived its purpose. They've also called for rationalizing the customs duty framework and slashing the number of slabs from 8 to 4.
I believe that the STT must go. It is high time it should go because, let me explain that. We brought it in 2004 as a substitute for long-term capital gains tax on equities. We reintroduced long-term capital gains tax on equity in 2018. 2 years back, we enhanced the rate of tax out there. Now what we have is a situation where the long-term capital gains taxes are substantial, are fairly of a large amount. There doesn't seem to be any legitimacy remaining in continuing with the STT any longer.
I think that is something that we can quite reasonably expect would happen in this budget. We are down to about 8 rates, not counting outliers. I mean, actually, there are outlying rates like 40, 70 and all, which I'm not taking into this reckoning. There would be moderation of rates. And my expectation is that the rates would come down to 4.
8 to 4?
8 to 4.
Ahead of the union budget, from industrial strategy to raising concerns over state freebies, the economic survey has offered some clues on the government's policy direction. Lata Venkatesh reads between the lines to decode what this could mean for the budget.
Yes, it is customary for the market to read the economic survey closely to see if there are any hints about what will come in the budget. And many people in the market are reading Chapter 16 as possibly indicative of what may come in the budget. This chapter is titled Import Substitution to Strategic Resilience and Strategic Indispensability, pages 630 to 653. What it argues is that globalization is dead. I mean, it's not working, and every country is for itself. Therefore, we must go Swadeshi. But we have to go Swadeshi with some guardrails. we must not allow those sectors to become protectionist and complacent like it happened in the 70s and the 80s. When we give protection, like in terms of demand assurance or import tariffs, it should be done with some production targets or some upgradation targets. Okay, the protection is to be given to industries based on India's vulnerability, where we can be blackmailed, and the other is where we are having a capability, and therefore that can be developed to enter global supply chains. The first category, tier 1, which is called non-negotiable, these are goods which are very essential for us and where we can be vulnerable. These include oils and pulses, fertilizer inputs. Remember, China recently stopped chemical inputs, raw materials for fertilizers. It also includes APIs, active pharmaceutical ingredients, which are raw materials for medicines, power electronics, industrial chemicals, and telecom equipment, because they are necessary for national security. The second category are what the survey calls strategic core, where India has a capability and it can enter global supply chains if we are competitive, which we have not been because of lack of policy coordination or over-regulation. These are magnets, battery cells and cathodes, solar wafers and cells. So maybe we can expect some support here. Then there is a category which it calls tier 2 and tier 3, where it believes that support is not needed. These are goods of low strategic importance, no vulnerability for India. These are cranes, industrial machinery, EV drivetrains and medical devices. Another category which doesn't require much support are rail signaling, defense electronics and electrolyzers. Over here, support is not expected. In short, the market is expecting some PLI support may come for the tier 1 sectors, but well, there's no guarantee. It's an advice from the survey. It may not even be heeded in the immediate budget.
Right, thank you, Lata, for that. Moving on, shares of South Indian Bank plummeted to a 3-month low after the bank announced that its MD and CEO, PR Sheshadri, will not seek reappointment. The bank said that Sheshadri has decided to pursue activities of his personal interest after the completion of his current term. He will remain in office till the 30th of September. In earnings reported today, FMCG giant Nestle posted a strong third-quarter performance that surpassed expectations on both the top and bottom line. Net profit surged 46%, aided by a one-time gain of 158 crore. Similarly, revenue, which was at a record high, grew 18.5%. However, margin narrowed by 200 basis points due to an increase in advertising spends. A one-time expense due to the new labour code impacted profit by 10 crore rupees. Apple saw a record quarterly revenue thanks to blowout iPhone 17 sales. The company's revenue from operations in India also hit a record high. Rashna Dhanrajani joins us now for more on Apple's earnings. Rashna, another record quarter for Apple.
That's right. Apple reported a revenue of $143.8 billion for the quarter. That's up 16% year-on-year, with net income at $42.1 billion. Earnings per share came in at $2.84. That's a 19% increase. And the company declared a dividend of 26 cents per share. The iPhone delivered its best quarter ever, generating $85 billion in revenue, up 23%, driven by strong demand for the latest iPhone 17 lineup. Now, services revenue hit a record high as well at $30 billion. This shows a growth of about 14% year-on-year. On the geography front, China posted a strong rebound with double-digit growth, while India and other emerging markets were highlighted as key growth drivers by Tim Cook. Now, management called it a record-setting quarter in both revenue and earnings, and said Apple's active device base has now crossed 2.5 billion globally. Looking ahead, Apple is projecting revenue growth of 13 to 16% in the current quarter. India featured prominently in management commentary. Apple reported its highest ever quarterly revenue in India, with records across iPhone, Mac, iPad and services during the December quarter. CFO Kevin Parekh said Apple's installed base in India grew at a double-digit pace, with a sharp rise in first-time buyers and upgraders. This points to a deeper market penetration by the company. Now, India also contributed to the global iPhone surge as Apple continued to gain share in the premium smartphone segment, with market share crossing 10% in late 2025. Now, the company is backing demand with continued retail expansion in India. This includes a second store in Mumbai's Borivali area, as confirmed by Tim Cook on the call. Now, the company has also been localizing prices for their services, and all this is along with a growing manufacturing footprint. This has led the tech company to highlight that India is now a long-term strategic market for them. This is both for sales and for its broader ecosystem ambitions. Back to you.
Right. Thank you, Rashna, for that. Time for a short break. Coming up next, India's new inflation formula will lower the weightage given to food prices. That and much more on the other side. Welcome back. India's new inflation formula will lower the weightage given to food prices. India's inflation calculation will see the base year shift from 2012 to 2024. Sapna Das is here with the details. Sapna, how will the new inflation math look like?
Well, definitely the objective here, or rather what may be an outcome of all of this, is the fact that the food price volatility or the spike in food prices, I mean, that to an extent will be contained. But having said that, first let's run through what are the basics over here. So number one, there is going to be a regrouping of commodities based on the purpose of consumption. So that's the principle behind this entire exercise. Currently under the CPI, you have 6 broad-based groups. Those have been kind of regrouped or reclassified into 12 divisions. And within that, basically food, the weightage is going to come down to under 35%. If you have a combined category of food and beverages, well, that's going to be under 37%. And this is a huge drop from the current close to 46% weightage that this category occupies in the CPI index. And if you can recall, whenever the food prices have been volatile, the inflation, there has been a spike, either ways, I mean, downwards, upwards, the index has been volatile, so to speak. So a lot of analysts have also told us that probably to that extent, this is going to be a better signaling mechanism. The new CPI series will be a better signaling mechanism from the policy perspective, as also for RBI. Apart from this, so when food goes down, what goes up? So basically, it's kind of all scattered in the new basket. You will have transport going up, the weightage for transport going up. You will have the weightage for fuel, electricity, household items, all of that going up. So the sense here is that basically the purpose of consumption has shifted since 2012, which was the earlier series. In 2024 series, it's going to be a more of an urban mix. So keeping that in mind, this is how this is going to look like. But of course, a big advantage is going to be in terms of containing that food price volatility, which has troubled the Reserve Bank of India and the government in the last 2 odd years.
All right. Thank you, Sapna, for that update. Shifting focus to the big international headline, US President Donald Trump is expected to appoint Kevin Warsh as the next chairman of the Federal Reserve later today. 55-year-old Warsh is a former Fed governor turned critic and is likely to succeed Jerome Powell. Trump has consistently bashed the Fed and its chair, Jerome Powell, for not cutting rates faster.
I'll be naming the Fed tomorrow morning. I've chosen a very good person to head the Fed. I'll be putting that out tomorrow morning. I'd rather say it tomorrow, but just an outstanding person and a person that won't be too surprising to people. A lot of people think that this is somebody that could have been there a few years ago. It's going to be somebody that is very respected, somebody that's known to everybody in the financial world, and I think it's going to be a very good choice. I hope so.
Russia has claimed it has invited Ukrainian President Zelensky to Moscow for direct peace talks once again. The Kremlin made the announcement as Kiev and Moscow continue to trade drone strikes. Russia has also refused to confirm Trump's claim that Russia's Putin has agreed not to attack Ukraine for a week due to extraordinary cold weather. US President Donald Trump on Thursday said he was planning to talk to Iran amid rising tensions. Trump said that he hoped to avoid military action while confirming that the US military is expanding its presence in the region. This as Iran's foreign minister travels to Ankara as Turkish diplomats seek to convince Tehran that it must offer concessions over its nuclear program.
Have you had any conversations with Iran in the last few days, and are you planning on any?
I have had, and I am planning on it, yeah. We have a lot of very big, very powerful ships sailing to Iran right now, and it would be great if we didn't have to use them. Okay?
Can you say what the message was that you shared with Iranians?
Well, I told them two things. Number one, no nuclear, and number two, stop killing protesters. They're killing them by the thousands. You know, I stopped 837 hangings 2 weeks ago.
US President Donald Trump has sued the Internal Revenue Service, the IRS, and the Treasury Department over the disclosure of his tax returns to the media. In the $10 billion lawsuit, Trump's lawyers alleged that the agencies failed to take mandatory precautions to prevent former officials from leaking his and his organization's tax returns to the media. And with that, it's a wrap on this edition of Business 360. News and updates continue right here on CNBC-TV18. Thank you for watching.